Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Okay, welcome everyone to the Week in Italian Startup. Today we have a very special guest, Andrea Colombo, founder and CEO of Tulu. And we're gonna go into a very deep dive into the business model, the real estate market, the future of social housing and alternative living, and a lot of very interesting topics. So Andrea, welcome. Nick, of course, welcome. Of course, Nick co-hosting the session. And so welcome,
Ciao,
Andrea.
Ciao Nicola, ciao everyone.
Ciao Andrea, welcome.
Thank you.
All right. So let's get going by talking about how exactly the idea of co-living, social housing. Let's start maybe a little bit far with the overview, the big picture, and the way you see it evolving. So you're very knowledgeable regarding the history. You've done a lot of research to what has been going on, and I was very fascinating of the fact that in Italy actually there are great experiments of co-living, social housing, very, very interesting. And so what's your take on that from an historical point of view?
Yeah, I've been studying a lot since I don't come from this space. So I've been studying for the last 2 years. Let's start from a very important misunderstanding about social housing, because social housing in the real estate market means housing that is affordable. Okay, so thought for people who can't afford housing, and as favorable rents. So when it comes to social housing, doesn't mean the dimension of sociality, okay, but means is related to the cost of the housing. We like when we've done the press release. I found interesting to be called social housing, so I find it somehow interesting. But anyway, that's not the proper terminology. But if we want to go back to the history, as we said in the beginning, when we think about social housing, we need to think back to the old entrepreneurs of the late 800th century, early 90s, families like Marzotto, which is, by the way, the heir of our lead investor, who basically built this very controversial at some point for the period of time, because basically they realized a village where people could live close to the industry, to the textile industry they had, and so in this very strange mix between living and working, but that was a super disruptive innovation. One of the first cases where really the employees and the workers were happy because they were living in a very nice place, and they thought about everything. So not just about housing and living, but also to the related services and to the public services such as theaters, mobility, cultural events and happening. So it was really a micro world, a micro system, but where there was a huge innovation, which was give the employee and the worker all the instrument to be happy and to be satisfied. Okay, and this is the vision of social entrepreneurs, like could be Marzotto, like could be Beniamino Crespi, like Adriano Olivetti, which probably is more famous. So all of these guys really think about the workers and the employees and build some of the value proposition of their of their business around the employees and the workers. And this is the very first innovation I think was relevant in the recent years, in the recent histories. And then of course the public money came in and started all the social housing financed by the public sector. In Italy, we had a long history about that. Some cases have been successful, others were not. And nowadays, unfortunately, housing still remains a problem. And unfortunately, governments doesn't have any more the money they used to have. So there's a mismatch between the demand and the offer, and pricing are always increasing. So it's really housing is really one of the challenges for the future, in my opinion. So as always, we are coming back. Instead of going forward, we are going back in the old problems.
Interesting. So, what is the correct nomenclature in that? In your respect, how would let's get some stuff straight. Let's use some right terminology.
About my model, you say? You
Yes.
mean? I think collaborative living. I love this. I love the fact that people can find a new way of living, a new way of being happy, a new way of feeling at home by staying together with other people. So this is where the innovation, in my opinion, comes from on a social standpoint. We need to think that we used to have a family structure decades ago, where in some cases the grandmothers live together with the parents. So we call a plurinuclear family. I don't know if this is the right terminology in English, but anyway, all these very large blood-related families. Nowadays, we are talking about the so-called chosen family. So this concept of very large family, where there is not anymore a blood connection, but there's an intentional connection. So you choose the people that you like and you love, and you decide that that is your family. So we're not talking about anymore, blood connections, but we're talking about chosen connection. And this is the future probably of the phenomenology of family evolution.
Very interesting. And I also thought what was interesting was that in terms of new renters, there are like a few new customers that are developing, which is, all the digital nomad sort of trend, people willing to work remotely, maybe in places they prefer to work instead of offices. And then by consequence, the family that are going to originate from the people used to work in this kind of fashion. So
Yes.
what's your take on this sort of new way of living the house, the office, home, both for tech reason and both for macro reasons such as like COVID and other elements that definitely had a big impact on that.
But this is one of the reasons why, together with Vittorio and Santo, I decided to start up this company. Because if you think about the structural demand, there is a huge shift which is happening. And my past of venture or wannabe venture investor, we like to invest in very early stage businesses with huge market in front of them. And if you think about housing and the way people live, is probably the largest market in the world. So we are talking about a macro trend of people that is from owning house, they switching to renting a house, and where all these guys and girls move around continuously. Okay, so they don't have anymore, as you said, the digital nomads, but also in general the people that doesn't consider themselves digital nomad, but they to stay. Okay, in a single point. So the market is really changing, and it's changing fast, and the offer doesn't catch up with the demand, because real estate is a super slow market. So you have huge demand on one hand and very small offer, and you are trying to enter this market and give an housing answer to all the people that really need a place that is able to satisfy the needs of the phase of life phase they are living. If you think maybe in a period of time of 3 years, you can be with the girlfriend or boyfriend, and then you can be alone, and then you can marry, and then you can have children, and then you can broke up just in 3-4 years. And the house where you live needs to change every time you have this kind of step, probably. And if you buy a house, of course, it doesn't help you. If you rent a house, you have full flexibility, and what the market, on our opinion, doesn't understand, at least hasn't understood so far, is that housing can provide an answer to very specific and vertical needs. So if you are young couples with children, you have specific needs that the real estate the assets needs to answer. If you don't build the house around the specific needs, I think you are not covering the demand, and this is what we're trying to do.
Yeah, talking about the market, there are new customers, so real estate developers need to adjust or see a new way to think about property. So, what's your take on how the market of real estate in general, being it like small local developers, like bigger company? You have cases where people providing office space now they're providing co-working spaces like Regos or other companies, and there are these kind of like tendency to actually move toward a new way of thinking about living and working. So I wanted to ask you, like, how exactly do you see the real estate market going in that respect?
I think that what we as a Tulu, we are in the build to rent market. Okay, there is this huge difference between build to sell and build to rent. Build to sell are the houses that you buy. The build to rent is the house that you rent. But in general, if we talk about one of the outcomes of the COVID, is that all the real estate investors used to invest mainly in commercial real estate and retail real estate. Okay, so about nowadays, after the COVID, there was a huge refocus on residential assets. And out of these residential assets and space, of course, the build to rent, which is a small niche, is becoming more and more important. And we are trying to educate not the institutional investors that are definitely aware and conscious about how the market is big and how, in terms of return potential, the build to rent is able to deliver, but also the private market, so the private, the family office that are used to consider the real estate in as a core, okay, business, a core asset, so with a very low risk and very low income, they can put some more money in more risky assets and more risky operators like we are, in order to get a more upside in terms of returns. So the market, on my opinion, in this very moment, we are lucky enough that, and we didn't expect, of course, because we started right in the COVID, but the market is going towards our direction, and of course the direction of all the operators that are doing renting businesses. And in fact, if you look around in Italy, but also abroad in Europe, in US, there are lots of build to rent operators that are rising and are doing great stuff.
Let's talk about one sort of benchmark case of the build to rent sort of business. So there are a few cases out there, both in US and in Europe, in Berlin. You guys are one of the first in Milan for sure, in Italy. So I was wondering, what's a good benchmark to you? Like, what do you think it's a good company that did something interesting in this respect?
What is nice or strange about this sector is that everyone has its own receipt. Okay, so you find a very interesting model, like for example, colonies in France. That is a model different, slightly different to ours, because they, at least at the moment, I know that they're moving towards larger locations, but basically they have small locations with few amenities. Okay, but they're really able to create this lovely community of people. The product is very nice, and I think they're doing a great job in France. And they raise a lot of money out of venture capital investors. But it's slightly different because we work on larger buildings. And then you find the so-called multifamily PRS, build to rent operators, that basically they just do what they used to do. So basically they manage real estate assets for people that are renting, with no brands, with nothing, with no experience, no events, no activities. So basically they just manage the asset and try to maximize the rent. So there is lots of different models, and all of them somehow is interested because each of them is able to capitalize on a growing market. Our special receipt is that we call ourselves an operator, a player that targets the intentional living. So people that make a choice, that decide to have a smaller apartments, smaller rooms, to have more community, more collaborative living, and more shared spaces. This is our market, and very few operators are in this market. and some of the ones that we were looking very deeply actually failed. So this is not a good call for us. But in general, we do think that, and our press release, which has been nothing but really, we had so many attentions from potential residents that we were completely impressed by the demand, by the need that these people have about this kind of housing format.
And do you think that the different recipes given the different countries reflect the different consumers? Like in Italy, maybe there is a bigger need for community experience, while maybe in other countries is more just in US there are experience of co-living where they just give you essentially furnished apartment with some amenities, and that's it. There is no community play, whatever. And it can work for young professional traveling around, no much need to build this community like environment, while in other cases maybe it's different.
No, I think there is room for everyone, because there is. I mean, if you think about what is your ideal house, probably is different than Nicola. Is different to me, and we're just three people, and we are talking about a sector where I think there are so many needs. So many dreams, and so many different way of living, that there's space for several operators with different models. What, in my opinion, needs to be very clear is the value proposition. Because if you don't have a solid value proposition or a unique value proposition, you grow because the market grows. But in the very moment the market starts slowing down, and the demand for any reasons decreases, in that case you really need to find something special to convince people to come to your house and to come to your place. We think we find our receipt in the collaborative way of living. Other operators have their own. We do think that you need to have one in order to have a long-lasting brand experience.
So you're basically on the eternal debate between buying and renting. You're definitely took your position and your stance. And so far, actually, the markets have been giving you a good signal, because I was checking some statistic, and buying property like slowed down globally, and new homeowner also like are decreasing. So is it a recession? Is it the crisis? Is it a new way of thinking? Well, we'll figure it out later.
We'll figure it out. Yeah. Now, if you think on a macro level, now we've been used to very low rates. And with the inflation that is going up, the rates will increase. So buying properties will become more expensive. That's another point that we need to take into account now about renting. So also where the world is going. I am a generation. I think we all are a generation that doesn't know anything about inflations. Okay, so we will see, because we are used to lend money for 1.1%, 1.5. What will happen if we increase to double? Okay, if we double the interest rate, we are talking about thousands and thousands of euros of interest costs more that you have to pay. So the market is really changing. I think we are in the right moment, in the right trend, honestly. But the market changes so fast that we don't know if by the moment we will be on the market, which will be next year, we will be still on the verge or not.
Awesome. Let's talk about investing in projects like yours, because with the new models and new ways of thinking about real estate, also investors sort of need to shift their way of thinking about, as you were saying, about the real estate investment. Maybe like a family office had always like a percentage of allocation in real estate, low risk, low rewards, fair enough. It was sort of the stable part of the portfolio. But now there are different shades of gray, such as a different play into real estate, like exactly as you say, the build to rent with the plus community building. That's a total different asset. So how do you see the real estate investor shifting? Are they seeing these tech movements? Are they seeing this trend, or they tend to be more conservative?
No, they definitely are seeing. there is still I can say that probably there are very few proven models of build-to-rent operators. So every investor I talk to, at least here in Italy, everyone is looking at this market. So everyone, I'm sure, will be looking at our first opening just to understand the product, just to understand if it works, just to understand if the economics work in order to deploy capital. They need to have some proof of concept. They need to have some track records. And very few operators are in the market at the moment because the lead time is really long. From the very moment you start the acquisition of the area to the moments that you put the asset in the market. And we're talking about 3.5 years, super long. So I think the market is definitely looking at this space, is investing, because a very large institutional investor invested in one of our assets and decided to develop that area with us as operator. So definitely the market is looking at this. There is very few track record of operators, but it's clear to everyone that the market is going there. Okay, and this is why also, in my opinion, the venture capital industry, the private equity industry are looking to this kind of businesses. Now, why Starwood or TKO invest in Dove Vivo? Why all these very private equity and hotel hospitality players invest in this space? Because they see the market is growing and the demand will be in the build to rent in the near future. So definitely, and also look at the market, the size of the market today, and they think about 10 years play. I think in 10 years we will have so many build to rent assets in the market, not just in Milan, Rome, Bologna, the main cities of Italy, but also in the smaller ones, because the demand is actually changing, and because the families and the individuals are changing the way they approach to the real estate.
But that begs the question, because you come from the venture capital market now, in a sense, and you know the rules. You have very limited time to generate value in your portfolio. So probably if a venture capitalist went to enter this type of market, where it takes 2 years and a half just to see one asset going up and going live, they need to change something in the way they think, in the way they actually interact with you. Is this something that you've seen that you can elaborate on?
Yeah, we in our seed funding, we discussed with a venture fund. We were pretty ahead with the process, and then they said they realized that it was not a venture play, and I tend to agree with it. No, at least on a seed level. Because it really takes a lot of time. It takes a lot of time if you want to be coherent with your product and with your vision, I think. Because if you want to somehow speculate and be fast and open locations and take apartments, except you can be. We could have opened flats, apartments. We raised a lot of money. We could buy apartments, but we decided to be very consistent with our vision of product. And being consistent and coherent means that you probably it takes longer. Okay, so in this sense, at least the seed validation of a build to rent model probably is not for venture, but for later stage, I think it is for growth equity, maybe private equity, because the business model is clear, stable. There is a good cash flow conversion. Somehow are predictable. Okay, if you do the right contracts, they are able to reflect the risk of the COVID or similar black swans. So yeah, I think there's a lot of room for venture operators, private equities operator to enter this market. And in fact, they are definitely it's definitely happened. LifeX in Europe raised from Cherry, Colonies raised from probably Allspring, I don't remember, but there are lots of co-living and build-to-rent operators that raise from venture capitals. We also have to consider, I don't have the statistics, but that most of the exit of venture capital funds are in secondary transactions. So they wait until the IPO or until the trade sale to exit the business. So if you reach the right KPIs and the right size in 3, 5, 7 years, which is an average time to exit, you can exit to a private equity, or you can exit to an hospitality operator.
Makes sense. I mean, actually, the idea is that it's easy to plan. Your business is easier to plan than others, so you can forecast cash flows and put a value on it in the future. That makes sense. Nice.
Quite easy compared to other businesses, at least. I'd say that on top of being predictable and stable in terms of revenue streams, there is a huge barrier to entry, because you really need a lot of capital to access to this kind of business. So it's not easy to enter. So there's a good barrier to entry. If you are able to generate pipeline, okay, so if you are able to sign lots of agreements, we signed 3 agreements, but hopefully we'll be signing more. You can somehow predict those revenues. Okay, so if let's imagine that in a month I close 10 lease agreements or management agreements, I can say that the revenues are easily projectable in the best and base scenarios. So that revenue pipeline means something. Okay, this is not a consumer that I have to acquire with an online customer acquisition cost, because I need to get to thousands of people. I need to get to 2, 3, 4,000 customers. And I can do one by one, probably. No?
And I think that's 2 points. There are two interesting points. One is the fact that I think data confirm exactly what you say, in the sense that seed stage round for a buy to rent company. I was checking some data on Crunchbase regarding early investors. It's very hard to find, Nick, like funds that we usually think about. It's usually people that they have no presence in the venture world, but if you go and dig deeper, those are developers, those are real estate investors. So there is a big push from traditional real estate investor to actually pull up all the new tech and the new concepts and the way of thinking about the real estate. Secondly, I think also the venture space is really kind of starting now to look into living, co-living, minimalistic living, alternative living, tiny homes. I know you mentioned sometimes tiny homes in your interviews, and all these there is an American company doing like houses out of container. There are a few of them trying to provide low cost and high efficiency housing. So they're just starting now to see those play, it's a total blend between like a tech play and a pseudo real play, if not a really real play deal. So that's
we used to think about venture capital to invest only in technology innovation, but that's not true. Venture capital doesn't need to be 100% technology. Of course, there's at least for what we think, there needs to be a very important technology component in our business that allows 2 things: the community to be able to be collaborative. Okay, so as the technology as enabler of the community, and on the other hand, as enabler of efficiency. So these are the 2 things where we are working on the technology. So if you want to be scalable, if you want to have best-in-class operations, if you want to have a real collaborative living, a real community, we need to have a solid technology. But in general, technology at the moment, at least, is not a revenue stream. Is the enabler of our vision. Okay, but still, if you think about the size of the market, definitely it could be fitting for a venture or private equity.
Super interesting. I'm going to challenge you really quick before we move to Tulu. So me and Nick, we always see startups that get a ton of money from CDP or some branches of CDP. And I was checking your round. There's no involvement of public money, I would say. So what's your thought of that? Because it's kind of out there. They're pushing, PropTech. Like just a few days ago, they launched their PropTech accelerator. So they're looking into different spaces. And your cap table is cleaner, so to speak, is private individuals, private companies, funds, family offices, wealth managers. So what's your thinking about it, of not using this kind of tool?
Actually, because we didn't need when we raised, honestly. We were able to raise from people that knew us from before, and of course that has this kind of vision of permanent capital. We call it permanent capital, so really long-term play that can deliver value in the long run, value in terms of economic returns, but also value to the people that hopefully will live in our buildings. Okay, so we're talking about play that really want to have an impact on the life of peoples. So we didn't think about public money. Also, I know that we are full aware in Italy are most of the cases really part of the funding history of startups, of companies. At the moment, we were lucky enough to have to raise the significant seed money, but probably in the near future, I never say no. So if Cassa Depositi CDP will want to evaluate an investment, I know that they only evaluate co-investments, but I never say no. I know that there's always a preferred way of growing in terms of equity. I hope to build a sustainable business. So I don't want to think to the next round yet. I want to try to build a sustainable company with a sustainable economics, profitability driven. I'm not in a hurry of growing. So I approach this as really, I can't say conservative approach, but really obsessed by the product. I want to be super obsessed by the product. I want to be my product to the best in class. And after that, I will think what would be the next step. If I really need to have more money to fuel my growth, or if I can have a super lean model that is able to scale with debt, or without even debt.
Awesome.
Self-finance, basically.
Awesome. We'll that sounds super interesting and way lighter than like other alternatives. So awesome job for sure. Let's talk about product then. Let's talk about business model in particular and your key elements of your business, of the Tulum business model, which involve a lot of like moving parts from the fact of finding the building, finding the architect studio that is like developing, all the fact that it's a rent only. You stress also in a lot of articles the idea of rituals, community rituals, and you mentioned that already a little bit. So I was wondering, let's focus on that. Let's focus from the full sort of business model play. I would go deeper in that.
Yeah, as most of the startups, we started with an idea, and then we understood there was a better idea that we were not considering. So let's say that the core business model, of course, is related to the management of the buildings. Okay, so we take money from the rents and we pay rents to landlords. Very, very easy. And on top of the rents, we take money out of the services, experiences, activities that we provide to our residents, that we will provide to our residents, and that will represent a revenue stream to our company. Then we understood that there is a huge value in incubating projects. What does it mean? To scout the asset, to scout the area, to start the due diligence, because the due diligence processes on real estate are very complex and very, very, very expensive. And start the due diligence while you work on the due diligence, working on your business case, and sell that business case to real estate investors. Okay. By incubating, of course, you can have higher capability and higher probability to be financed to be financed by investors, and on the other hand, to have a grip on the project, because as I said, we are obsessed with the product. We want to build up a best-in-class product, and we need, together with the architects, of course, but we are super opinionated and we want to bring our value to the products. So if we are able to incubate from the beginning, we are able also to bring more value to the more vision of our products to the asset, and that also represents a revenue stream, because in that case we become operating partner of the fund, and by becoming operating partner, we take some some fee for the support that we provide and the consultancy that we provide on the product and on development of the product. And then, of course, the third one, which is split it into two parts. One is working on getting some upside from the future sale of the asset. Okay, so taking a percentage of the value that you're able to create with your management. And on the other hand, also in the near future, we're working on investing ourselves in the real estate. So becoming if you want to be ambitious, an investment manager, but if you want to be more conservative, to put some money also in the asset, because there's a huge value in the real estate itself, and we need to take part of that upside if you want to be scalable and especially a profitable and healthy company. We're not yet there. This third step is ahead of us, but hopefully we will get it soon.
Awesome. So the starting point is really identifying the property, putting together, taking Tulu template and apply to the property, and then going to the investor and be like, okay, that's what.
Exactly, and focus very much on the operation, on the services, on the experience that you provide. Because if your operation doesn't work, if your technology doesn't work, if basically the assets, the experience doesn't work, you're completely gone. And this is another very different thing compared to other business models, to our other startups, because the proof of concept, this is not a concept. This is a 3,000 square meters building. So the failure is not very welcome by investors in general. So it's gonna be challenging to try to do our best in the first openings. We know we'll commit some mistakes, but we are having enough time to map all the potential limitations and difficulties, and so I hope we'll be ready when we will reopen.
If I may, Jack, I've got a bit of a financial nerd question of how you are approaching the way you set up your project, basically. So you got the asset and you've got the operations, right? Are you putting them all together into the same balance sheet, let's say so? Are you creating something more, nuanced? So you're acquiring the building and
no, at the moment we are, as I said, at the moment we don't take part into the real estate. So we in terms of we as I said, it's yet to be. But at the moment we focus ourselves only on the origination of the asset and on the management. So we are building up our playbooks and best practices in order to manage and to run the operation of the building. This is our main focus at the moment. I'm talking about more a long-term perspective that could become real even sooner than expected. But at the moment, we focus only on the core business, which is the running the operations of our
operations. That's something that was completely missing from your model. Okay, so you're basically leaving all the real estate out of your balance sheet.
At the moment, yes, and we focus only on the management. Yes.
And I guess
that a lot of flexibility,
as most of the other operators have, because most of the other operators don't touch the real estate. We would like to go there, as I said, soon, but we're not there yet.
So I guess the raise that you guys closed is it's probably 100% focused on the operation. So there is no involvement in any real estate asset.
Yeah.
Okay, cool.
Half of it goes to technology.
Okay.
So when I said at the beginning that technology is key for us, is not just a word, but it's really something that we are building, a proprietary technology that will help us in managing the assets and really enable our community to do something that they will only do in our buildings, I'm sure, because we've done some. We are projecting some services that will be available only in our buildings because they are so complicated. Because building a community everyone says that there's a community, of course. Okay, even if you, even the bar, the restaurant below your house, probably, we are a community now. It's very mainstream. But building a community is not just drinking a beer together, but it's really, if you think on a sociological perspective, is doing something for the other. Okay, in the very moment you are able to actionate the individual to commit himself to do something for the other, okay, for the other person, for the other people, you are building a community, and that comes with gratuity. So it has no remuneration. So you're doing something for the person that is in front of you, but without expecting something back. And that's how works the community. Okay, so if you are able to work around this and enable people to start doing something for the others, as it used to be in our past, where the older of the house took care of the babies while the families were going out for work, and the youngsters instead helped the older, maybe with heavy labor. So these kind of things, okay, we want to replicate in our buildings and really enable people to do something for the community. So this is the way we're building our community, which is not just drinking a beer together or doing an aperitivo. It's something a little bit
that's a super interesting element, which is pretty much the core of your recipe, talking about recipe. Yeah. And so the extra challenge is really how do you digitize that and not just reduce it to, some, like a little bit of team doing events occasionally and try to involve people in, concerts, social nights, which from what I understand is not enough. It's not the kind of thing you want to trigger. You really want to trigger a better, like a deeper dynamic than that. So yeah.
Your asset, you project your asset, you think around your asset, helps to gather people. Okay, if you think we are used to have a very functional way of living, the first thing that you do when you enter your house probably is going to the elevator. Of course, that doesn't help meeting other people. In our buildings, elevators will be on the opposite side of the entrance. Just a small thing, okay, but give the occasion of meeting other people. And if you are in the right mood, you can stay. If you are in the wrong mood, you need to be open to change your mood, because you meet people and those people are supposed to help you in finding a better mood than what you have. So something important is related to the asset itself. On the other hand, the technology enable some collaborative services and some collaborative alternatives, some collaborative activities. What I mean for that as Toulouse, we commit to provide the rewards to people that do something for the community, which means that each member of the community could have a role in our building. And with that role, you can do things, you can organize things, and you can receive a reward from the community itself or from ourselves as a company. So we, as a company, invest also money in that. Money or discounts or all this kind of thing, just to help people to live better and to stay better, and really to find the value of staying together, because we are completely losing this. About Milan, some numbers about Milan: the 40% of the population doesn't know the neighborhood. Okay, so we're talking about a society that is going towards loneliness, that is really feeling that pain. I felt that pain when I used to live in Lugano, for example, in my very small room, and I understand what it means and how that can change your character, the way your feelings, your way of view your life. So if you're able to help people in not feeling alone anymore and to really find themselves into this place, into this community, I think we will succeed our business case, and our company will be a relevant player in the build-to-rent sector.
If I may, how do you expect to build this community? I mean, the communities are made, some kind of sharing is right, but sharing means to have some, mixture in a sense, no?
Yeah.
So if you have other people that wants to join the building, how do you vet them? How do you decide who's entering the community?
We do we call a co-project. So I don't know if that's the right word, but anyway, 6 months before the opening, we select the members with an application. And those people will also participate to the planning of some of our services and experiences and activities. So we really we are building the asset top down, but we are building the services and the experience bottom up. So we allow our community to take some decisions on what they would like to find in the asset that will go to live, and that small group of people. This is taken from the co-housing. Okay, we're not inventing anything. This small group of people will have the capability of doing stuff into
contributing, basically.
Contribute to us as a company, but also to the asset. And this goes from the very long list of services that we are doing, that we are offering: the vegetable garden, the purchase group, the social eating. So all of these activities will be run by the community itself. We won't have a community manager there. This is why collaboration for us is important, because it enables people to not feeling a super serviced apartment where you don't do anything. You can do that, but we expect people to leave the whole building as their own house and to participate actively to the running of the business, to the running of the operation.
I've got a mandatory joke on this. I will have to update my CV also to apply for housing.
Please.
All right, we are on the closing remarks. So Andrea, what's next for Toulouse? What's the plan for the next? What's the status now? What's the next 6 months look like for you?
Yeah, the status now is to surf the waves of these very difficult moments in terms of costs, because the cost of our buildings are increasing as crazy because inflations, because of scarcity of the demand and offer, basically. So the first thing is really surfing this and being able to deliver the best product, notwithstanding the moment in terms of cost that we are experiencing nowadays. So the current focus is really working, obsessed with the product, putting all our effort and love in what we do in terms of product. In the future, we plan to hopefully acquire other assets. By acquiring, I mean, of course, signing agreements, lease or management agreements with funds, with institutional investors or private investors in the main cities. Milan is one of them, of course, but also Rome, Bologna, and Firenze. We're looking at them. And this is the second step. So going from the 3 that we already signed to 7, maybe in the next 6 months, 8 months.
Nice.
That will be on the market, of course, in the period of time that is possible. But the third thing is definitely focus on the first product that will be on the market and really listen to people, listen to them, understanding if you're doing the right thing. Trying to pivot if you're doing some things that they didn't expect. So we challenge ourselves on continuously by trying to respond to the needs of the people that we want to address, and really building this super brand that really welcomes people to feel them at their home for a very long period of time. So this is
awesome.
My big wish for myself.
Awesome. And when application are going to be open for the first building?
I think early next year, early 2023, online. At the moment, we only have social media pages, but with no web, so just a landing page, no applications. But we are working to have something by early 2023, because the first opening probably will be around September next year.
Beautiful.
Awesome.
All right. So, guys, thank you so much for joining. Thank you, Nick. Thank you, Andrea. Very interesting and fascinating discussion. And I would love to have you on another note to see exactly how the evolution of the project is gonna.
In 1 year, probably I'm gonna say the same thing without having opened a building yet. But unfortunately, this is the space we decided to be in. So
awesome.
We are aware of that.
It takes time.
It takes a lot of time. Yes, it takes time.
All right. Thank you very much.
Long-lasting things always require a lot of time.
All right. Thank you very much. And until next time, this is the Week in Italian Startup. And thank you all the listener. And I'll see you the next time.
Thank you, Jack.
Bye-bye.
Thank you.
Ciao.